A financial revolution is here, and it's reshaping the way we think about money and finance. Decentralized finance, or DeFi, is transforming how we interact with money. Unlike traditional financial systems that rely on centralized institutions like banks and governments, DeFi operates on decentralized networks. It's a new financial system built on blockchain technology, which ensures transparency and security. Blockchain acts as a digital ledger that records all transactions across a network of computers. DeFi aims to create a more open, transparent, and accessible financial system for everyone. This means that anyone with an internet connection can participate in the financial ecosystem, regardless of their location or background. Imagine accessing financial services without needing banks or intermediaries. You can send money, take out loans, or invest in assets directly from your smartphone or computer. That's the power of DeFi. It puts financial control back into the hands of individuals, reducing reliance on traditional financial institutions. DeFi allows you to lend, borrow, trade, and earn interest on your money. These services are available 24/7, unlike traditional banks that have limited operating hours. All this happens on a decentralized network, controlled by users, not institutions. This means that the rules and operations are governed by smart contracts, which are self-executing contracts with the terms directly written into code. This new paradigm is revolutionizing finance and empowering individuals globally. By removing barriers and intermediaries, DeFi is making financial services more inclusive and equitable for everyone. Breaking the mold. Traditional finance relies on centralized institutions like banks. These institutions act as intermediaries for financial transactions. They control your access to financial services and your money. This centralized system can be slow, expensive, and exclusionary. DeFi challenges this traditional model. It leverages blockchain technology to eliminate the need for intermediaries. Transactions occur directly between users, facilitated by smart contracts. This peer-to-peer system is faster, cheaper, and more inclusive. The building blocks. Blockchain is the foundation of DeFi. It's a distributed ledger that records transactions across a network of computers. This makes transactions secure, transparent, and tamper-proof. Smart contracts are self-executing contracts on the blockchain. They automate financial agreements, ensuring trust and transparency. For example, a smart contract can automatically execute a loan agreement when certain conditions are met. Cryptocurrencies like Bitcoin and Ethereum are the native currencies of many blockchains. They facilitate transactions and power the DeFi ecosystem. DeFi advantages. DeFi offers several advantages over traditional finance. It provides greater accessibility to financial services, especially for the unbanked population. With DeFi, anyone with an internet connection can access financial tools and services. DeFi transactions are generally cheaper than traditional banking fees. This is because DeFi eliminates intermediaries, reducing transaction costs. DeFi gives users more control over their money. You manage your assets directly without relying on third parties. This empowers individuals and promotes financial sovereignty. Section 5. Navigating the risks, security, volatility, and regulation. While DeFi offers tremendous potential, it's important to be aware of the risks. Security vulnerabilities in smart contracts can be exploited, leading to financial losses. The value of cryptocurrencies can be highly volatile, posing risks for investors. The regulatory landscape for DeFi is still evolving. Lack of clear regulations can create uncertainty and potential risks for users. It's crucial to stay informed about the latest developments in DeFi security and regulations. Section 6, DeFi in Action, Real-World Examples. In this section, we will explore how decentralized finance, or DeFi, is being utilized in the real world. From lending and borrowing to trading and stablecoins, DeFi is revolutionizing the financial landscape. Lending and borrowing are popular DeFi applications. These services allow users to leverage their crypto assets in ways that were previously only available through traditional financial institutions. Platforms like Aave and Compound allow users to lend their crypto assets and earn interest. These platforms operate without intermediaries, providing a more efficient and accessible way to manage assets. Borrowers can use their crypto as collateral to access loans. This process is streamlined and often more flexible than traditional loans, offering lower interest rates and faster approval times. Decentralized exchanges, or DEX, like Uniswap and SushiSwap, facilitate peer-to-peer cryptocurrency trading. These platforms enable users to trade directly with one another, bypassing the need for centralized exchanges. These platforms eliminate the need for centralized exchanges, giving users more control over their trades. This decentralization reduces the risk of hacks and fraud, making trading more secure. Stable coins like Tether and USD Coin are cryptocurrencies pegged to the value of fiat currencies. They offer a bridge between the volatile world of cryptocurrencies and the stability of traditional money. They offer price stability, making them suitable for everyday transactions. Whether you're buying a coffee or paying for a service, stable coins provide a reliable means of transaction without the fear of sudden value changes. As DeFi continues to grow, more innovative applications are emerging. From yield farming to liquidity mining, the possibilities are expanding, offering users new ways to earn and manage their assets. The real-world impact of DeFi is just beginning to unfold. As more people adopt these technologies, we can expect to see even greater changes in how we interact with financial systems. The future of finance is decentralized, and it's happening now. Section 7, the future of finance, DeFi's potential impact. DeFi has the potential to revolutionize the financial industry. By leveraging blockchain technology, DeFi eliminates the need for traditional intermediaries like banks and financial institutions. This means lower costs, faster transactions, and greater transparency. It can create a more inclusive, efficient, and accessible financial system for everyone. Imagine a world where financial services are not limited by geography or socioeconomic status. DeFi can bridge the gap, providing financial opportunities to underserved communities around the globe. As DeFi technology matures and gains wider adoption, we can expect to see even more innovative applications emerge. From decentralized lending platforms to automated insurance claims, the possibilities are endless. Developers are constantly exploring new ways to utilize DeFi to solve real-world problems. Imagine a world where cross-border payments are instant and inexpensive. Traditional remittance services can be costly and slow, but DeFi can streamline this process, making it more efficient and affordable for everyone involved. Where access to credit is no longer a barrier, small business owners and individuals can obtain loans and credit through decentralized platforms without the need for a traditional credit score. This opens up new opportunities for entrepreneurship and economic growth, and financial services are available to anyone with an internet connection. In remote areas where traditional banking infrastructure is lacking, DeFi can provide essential financial services, empowering people to participate in the global economy. DeFi makes this vision a possibility. By harnessing the power of blockchain and decentralized networks, we can build a more equitable and efficient financial system for the future. The potential impact of DeFi is immense, and we are just beginning to scratch the surface of what it can achieve. Section 8. Getting started with DeFi, a beginner's roadmap. If you're interested in exploring the world of DeFi, start by educating yourself. Learn about blockchain technology, smart contracts, and cryptocurrencies. Choose a reputable cryptocurrency exchange to buy and sell crypto assets. Research different DeFi platforms and applications. Start with small investments and gradually increase your exposure as you gain experience. Remember to prioritize security. Use strong passwords and store your crypto assets securely. Section 9. Conclusion. Embracing the decentralized future. DeFi is transforming the financial landscape, offering a glimpse into a more open and accessible financial future. While challenges and risks exist, the potential benefits of DeFi are undeniable. By understanding the fundamentals and approaching DeFi with caution, individuals can position themselves to benefit from this financial revolution. The future of finance is decentralized, and DeFi is leading the way. Decentralized finance, or DeFi, is transforming finance. It removes intermediaries like banks. DeFi uses blockchain technology. This allows for peer-to-peer transactions. DeFi offers transparency and accessibility. Imagine a world without traditional financial institutions. This is the promise of DeFi. It empowers individuals with control over their assets. DeFi enables new financial services and opportunities. It's a radical shift from centralized systems. DeFi is built on open source protocols. These protocols are transparent and verifiable. This fosters trust and innovation within the ecosystem. Anyone can participate in the DeFi revolution. It's a level playing field for all. DeFi is evolving rapidly. New applications are emerging constantly. The potential for disruption is enormous. DeFi is poised to reshape the financial landscape. It's an exciting time to be part of this revolution. DeFi's roots lie in the emergence of Bitcoin, the first successful implementation of a decentralized digital currency. Bitcoin introduced the revolutionary concept of a decentralized digital currency, free from the control of any central authority. It proved that trust could be established without intermediaries, using a transparent and immutable ledger known as the blockchain. This groundbreaking innovation paved the way for more complex financial applications, setting the stage for the DeFi movement. Ethereum played a pivotal role in DeFi's evolution by introducing a platform that could support decentralized applications. Ethereum's smart contract functionality was a game-changer, allowing developers to create self-executing contracts with the terms directly written into code. It enabled the creation of programmable agreements that could operate autonomously without the need for a central authority. These agreements could be executed automatically on the blockchain, ensuring transparency and reducing the risk of fraud. Early DeFi projects emerged in the wake of Ethereum, exploring new possibilities in decentralized finance. These pioneering projects focused on basic functionalities like lending and borrowing, which are fundamental to any financial system. MakerDAO, established in 2014, was a pioneer in this space, offering innovative solutions for decentralized finance. It allowed users to collateralize ETH and generate DAI, a stablecoin pegged to the US dollar, providing stability in the volatile crypto market. The DeFi ecosystem has witnessed exponential growth, attracting billions of dollars in investments and user participation. Thousands of projects now offer a wide range of services, from lending and borrowing to more complex financial instruments. From decentralized exchanges to insurance and prediction markets, the scope of DeFi continues to expand. DeFi is transforming traditional finance, offering more accessible, transparent, and efficient financial services. Its impact is being felt across various sectors, heralding a new era of financial innovation and inclusion. Smart contracts are the backbone of DeFi. These are self-executing contracts. The terms of the agreement are written directly into code. This code is stored and executed on the blockchain. Smart contracts automate complex financial transactions. They eliminate the need for intermediaries. This reduces costs and increases efficiency. Smart contracts ensure transparency and immutability. When a predetermined condition is met, the smart contract automatically executes. For example, in a lending agreement, the contract automatically releases the funds to the borrower once the collateral is provided. The entire process is transparent and auditable. Smart contracts are revolutionizing traditional agreements. They provide a secure and efficient way to manage complex transactions. DeFi relies heavily on the power of smart contracts. They are the driving force behind its transformative potential. Decentralized applications, or dApps, are the user interface of DeFi. They are applications built on decentralized networks. dApps interact with smart contracts to provide various financial services. Unlike traditional apps, dApps are not controlled by a single entity. They are open source and transparent. This empowers users with greater control and security. dApps are accessible to anyone with an internet connection. Examples of dApps include decentralized exchanges like Uniswap and SushiSwap. These platforms allow users to trade cryptocurrencies directly from their wallets. Other dApps offer lending and borrowing services, insurance, and more. dApps are constantly evolving, bringing new innovations to the DeFi space. They are the gateway to a more accessible and equitable financial system. As the DeFi ecosystem matures, we can expect to see even more sophisticated dApps emerge. Section 5. Liquidity pools, the fuel for DeFi engines. Liquidity pools are essential to DeFi, acting as the backbone of decentralized finance. They are pools of cryptocurrencies locked into smart contracts, ensuring the smooth operation of various DeFi protocols. These pools facilitate trading, lending, and other DeFi services, making them indispensable for the ecosystem. Users provide liquidity to these pools and earn rewards, which can be a significant incentive. When users provide liquidity, they receive LP tokens, which are unique to each pool. These tokens represent their share of the pool, giving them a stake in the pool's performance. They can redeem these tokens for their original assets, plus any earned fees, providing liquidity providers with a return on their investment. Liquidity pools enable efficient trading and arbitrage opportunities, which help maintain market stability. For instance, Uniswap utilizes liquidity pools to facilitate token swaps, allowing users to trade directly from their wallets. Users deposit equal values of two tokens into a pool, creating a balanced market for trading. When a trade occurs, the price is determined by a smart contract based on the ratio of assets in the pool, ensuring transparency and fairness. Liquidity pools are the lifeblood of many DeFi applications, enabling a wide range of financial services. They incentivize users to contribute to the ecosystem, fostering growth and innovation. The larger and more liquid the pool, the more efficient and stable the DeFi platform becomes, benefiting all participants. Section 6. Yield farming, cultivating returns in the DeFi garden. Yield farming is a popular DeFi strategy that has gained significant traction in recent years. Users lend their crypto assets to earn interest and other rewards, often in the form of additional cryptocurrency tokens. It involves strategically moving assets between different DeFi protocols to maximize returns, taking advantage of varying interest rates and incentives. Yield farmers seek out the highest annual percentage yields, or APYs, to maximize their earnings. These yields can fluctuate significantly based on market demand, liquidity, and the inherent risk of the protocols. Yield farming can be lucrative but requires careful consideration of risks, including smart contract vulnerabilities and market volatility. For example, a yield farmer might deposit their stable coins into a lending protocol like Aave to earn interest. They could then use the borrowed assets to provide liquidity to another protocol, earning rewards from both platforms and compounding their returns. Yield farming has attracted significant capital to the DeFi space, driving growth and innovation. It has also driven innovation as protocols compete to offer attractive yields and unique features to attract users. However, it's crucial to remember that higher yields often come with higher risks, and thorough research is essential before committing assets. Section 7. Governance tokens steering the future of decentralization. Governance tokens are unique to DeFi. They give holders voting rights in a protocol's governance. Holders can influence decisions about the protocol's future development and operation. These tokens embody the decentralized ethos of DeFi. They allow communities to collectively govern protocols. Governance tokens encourage active participation and align incentives among stakeholders. For example, holders of the Compound token can vote on proposals related to the Compound lending protocol. This includes changes to interest rates, collateralization ratios, and the addition of new assets. Governance tokens are becoming increasingly important in the DeFi landscape. They represent a powerful tool for building truly decentralized and community-driven financial systems. Section 8. Real-world DeFi lending, borrowing, and beyond. DeFi is not just theoretical, it has real-world applications. Lending and borrowing are prime examples. Users can borrow and lend crypto without traditional financial institutions. Decentralized exchanges are another popular application. They allow users to trade crypto directly from their wallets. This eliminates the need for centralized exchanges and their associated fees and restrictions. DeFi also extends to areas like insurance, prediction markets, and stablecoins. Insurance protocols provide coverage against smart contract risks. Prediction markets enable users to bet on the outcome of future events. Stablecoins offer a less volatile alternative to traditional cryptocurrencies. The use cases for DeFi are constantly expanding. As the technology matures and adoption grows, we can expect to see even more innovative applications emerge, blurring the lines between traditional and decentralized finance. Section 9. DeFi's impact, reshaping the financial landscape. DeFi is transforming the financial landscape in profound ways. It promotes financial inclusion by providing access to financial services for the unbanked. DeFi empowers individuals with greater control over their assets. Transparency and immutability are key features of DeFi. All transactions are recorded on the blockchain, making them transparent and auditable. This reduces the potential for fraud and manipulation. DeFi challenges the traditional financial system. It offers an alternative to centralized institutions. DeFi fosters innovation and competition in the financial sector. This benefits consumers by providing more choices and better services. DeFi is still in its early stages. Challenges remain, such as scalability and regulatory uncertainty. However, the potential of DeFi to revolutionize finance is undeniable. It's a force to be reckoned with. The world of finance is undergoing a radical transformation. Decentralized finance, or DeFi, is at the forefront of this revolution. It promises a future where financial services are accessible to everyone, regardless of location or background. DeFi empowers individuals with control over their assets and offers a transparent and open alternative to traditional financial systems. This emerging technology is built on the foundation of blockchain, a secure and transparent digital ledger. Blockchain eliminates the need for intermediaries like banks, allowing for direct peer-to-peer transactions. Smart contracts, self-executing agreements written in code, automate these transactions, ensuring trust and efficiency. The implications of DeFi are far-reaching. It has the potential to democratize finance, level the playing field, and unlock new possibilities for economic growth. As the DeFi ecosystem continues to evolve, it is crucial to understand its underlying principles, mechanisms, benefits, and risks. This essay delves into the world of DeFi, exploring its core concepts, advantages, and challenges. We will examine how DeFi is reshaping the financial landscape and discuss its potential to revolutionize the future of finance. At its heart, DeFi is driven by a set of core principles that distinguish it from traditional finance. These principles underpin its transformative potential and guide its development. Decentralization. DeFi removes intermediaries from financial transactions. Instead of relying on banks or other institutions, users interact directly with each other through decentralized networks. This peer-to-peer approach reduces the risk of censorship, fraud, and single points of failure. Permissionless access. DeFi is open to anyone with an internet connection. Users are not subject to the restrictions and barriers often imposed by traditional financial institutions, such as credit checks or geographic limitations. Transparency. All transactions on a DeFi platform are recorded on a public blockchain. This transparency ensures accountability and allows users to track their funds at every step. Interoperability. DeFi protocols are designed to interact with each other seamlessly. This interoperability fosters innovation and creates a more interconnected and efficient financial system. These principles, combined with the power of blockchain technology, empower individuals and create a more equitable and accessible financial landscape. DeFi encompasses a diverse range of applications and protocols, each with its unique functionality. These mechanisms create a comprehensive, decentralized financial system. Smart contracts automate agreements. Decentralized exchanges allow direct crypto trading. Lending platforms offer crypto loans. Stablecoins mitigate volatility. Liquidity pools enable earning fees. Staking supports blockchain networks. DAOs govern DeFi protocols. DeFi offers a compelling alternative to traditional finance, promising a range of benefits that have the potential to revolutionize how we interact with financial services. Financial inclusion. DeFi has the power to bank the unbanked. By removing barriers to entry such as credit checks and geographic restrictions, DeFi makes financial services accessible to billions of people who are currently excluded from the traditional financial system. Censorship resistance. Because DeFi operates on decentralized networks, it is resistant to censorship by governments or other central authorities. Users have full control over their funds and can transact freely without fear of account freezes or restrictions. Lower fees. By eliminating intermediaries, DeFi reduces transaction costs significantly. Users benefit from lower fees for transferring funds, trading, lending, and borrowing. Transparency and security. All transactions on a DeFi platform are recorded on a public blockchain, ensuring transparency and accountability. The use of smart contracts also enhances security, as the code is publicly auditable and tamper-proof. Faster transactions. DeFi transactions can be processed much faster than traditional bank transfers, especially for cross-border payments. The use of blockchain technology eliminates the need for intermediaries and reduces processing times. These advantages highlight the transformative potential of DeFi to create a more accessible, affordable, and efficient financial system. Section 5. Risks and Challenges. Navigating the DeFi Landscape. DeFi offers opportunities, but comes with risks. Smart contract vulnerabilities, impermanent loss, regulatory uncertainty, scams, and market volatility are key challenges. Section 6. DeFi Use Cases Transforming Traditional Finance. DeFi is not limited to theoretical concepts. It has real-world applications transforming traditional financial services across various sectors. Decentralized lending and borrowing platforms like Aave and Compound allow users to lend and borrow cryptocurrencies without intermediaries. Borrowers can access loans by collateralizing their crypto holdings, while lenders earn interest on their deposited assets. Decentralized exchanges DEX like Uniswap and SushiSwap enable the trading of cryptocurrencies without centralized intermediaries. These platforms rely on automated market makers, or AMs, to facilitate trades and provide liquidity. Stablecoins and payments. Stablecoins like Tether, USDT, and USD Coin, USDC, offer a stable store of value pegged to fiat currencies, mitigating volatility risks. They are increasingly used for payments, remittances, and as a hedge against inflation. Prediction markets. Decentralized prediction markets allow users to speculate on the outcome of future events. These platforms leverage the wisdom of the crowd to generate accurate predictions and provide valuable insights. Decentralized insurance. DeFi insurance protocols offer an alternative to traditional insurance models. Users can pool their funds to provide coverage for specific risks, and payouts are automated through smart contracts. These are just a few examples of how DeFi is disrupting traditional finance and creating new opportunities for innovation and financial inclusion. Section 7. The Future of DeFi Innovations and Integrations. The DeFi space is constantly evolving, with new innovations and integrations emerging rapidly. Several key trends are shaping the future of DeFi. Layer 2 solutions. Layer 2 solutions, such as Optimism and Arbitrum, aim to address the scalability limitations of blockchain networks like Ethereum. They offer faster and cheaper transactions, enhancing the user experience and expanding the potential applications of DeFi. Cross-chain interoperability between different blockchain networks is crucial for the continued growth of DeFi. Projects like Polkadot and Cosmos are building bridges between blockchains, enabling seamless asset transfers and interactions between DeFi protocols on different platforms. Institutional adoption. Institutional investors are increasingly recognizing the potential of DeFi. As regulatory clarity improves and institutional-grade custody solutions emerge, we can expect to see greater institutional participation in the DeFi space. Improved security protocols. Security remains a top priority for the DeFi ecosystem. Developers are constantly working on improving security protocols, auditing smart contracts, and developing tools to mitigate risks and enhance user protection. Mainstream integration. The integration of DeFi into mainstream financial systems is a key milestone for mass adoption. We're already seeing partnerships between DeFi protocols and traditional financial institutions, paving the way for greater accessibility and user-friendliness. Section 8. DeFi and Regulation, Balancing Innovation and Consumer Protection. As DeFi grows, regulators must balance innovation and consumer protection. Clear regulations provide certainty and protect investors. Frameworks should address DeFi's unique characteristics. Protecting consumers from fraud is essential. Regulators must ensure market integrity. AML and KYC compliance are challenging. Balancing privacy and preventing illicit activities is key. International collaboration is necessary. Harmonized regulations prevent arbitrage. The regulatory landscape will shape DeFi's future. Balancing innovation and protection unlocks DeFi's potential. Section 9. Conclusion: embracing the transformative potential of DeFi. Decentralized finance is revolutionizing the financial industry, offering a glimpse into a future where financial services are more accessible, transparent, and efficient. While challenges and risks remain, the potential benefits of DeFi are undeniable. As the DeFi ecosystem continues to mature, we can expect to see increased adoption, innovation, and integration with traditional financial systems. Layer 2 solutions will address scalability concerns, cross-chain interoperability will connect disparate blockchain networks, and institutional participation will bring further legitimacy to the space. However, the future of DeFi is not without its challenges. Smart contract vulnerabilities, regulatory uncertainty, and market volatility pose ongoing risks. Addressing these challenges through technological advancements, regulatory clarity, and responsible innovation is crucial for ensuring the long-term sustainability and success of DeFi. Despite the challenges, the transformative potential of DeFi is undeniable. By empowering individuals, fostering financial inclusion, and driving innovation, DeFi has the power to reshape the financial landscape and create a more equitable and accessible financial system for all.